Scan for Sovi and straight A's only. Let's go! Inflationary gaps require contractionary monetary policy to slow the economy. We must identify which action reduces the money supply to fix this gap. To close an inflationary gap, the central bank must decrease the money supply. This raises interest rates, which reduces investment and consumer spending to bring the overall price level down. Selling bonds on the open market is the perfect tool here. When the central bank sells bonds, it pulls cash out of the banking system, effectively shrinking the total money supply. Options B and C are fiscal policies. Decreasing the discount rate or reserve requirements expands the money supply, worsening inflation. Well done! Option A is correct. Scan the code to learn with Sovi. Watch signs and avoid rushing. Trust the steps.